Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Lori Graymont. Lori is the Chief Executive Officer of Summit Assets Group. She's been working in real estate investing for over 20 years. She started when she was 3. Actually, Lori started out helping her mom and dad rehabbing properties when she was a teenager.
Yeah.
But she got to be very good with her tools. She's very good with a drill and a hammer. And her husband was jealous of her tools, and so he said that he married her for her tools. But as you can see, when you see Lori, she's actually very attractive, and obviously married her for other reasons as well. And she's a very sharp lady, as you can tell. All right. Well, anyway, Summit Assets Group is her company. It helps connect investors with opportunities for different type of real estate investment properties. They do coaching to help people that want to, to some guidance in getting involved in real estate investing. A little hand holding there, good idea. Also, they have kits available for like turnkey systems. For those who just want to do it themselves and slog their way through to get a little guidance along the way. So anyway, so that's a little bit of what she does with that. Lori was just bragging to me that she and her family now have a cow. She lives in Morgan Hill.
And I get to milk my cow every morning.
Oh, you're so lucky. And the cow will let you know if you don't, too.
That is for sure. My neighbors asked, is there something wrong with your cow? Why does she moo every morning at 5:30? And I said, yeah, she wants to be milked.
And Lori, also, how many children do you folks have?
We have 4.
4 children,
4
okay.
children, yes.
But there were a couple of them that were adopted, isn't that right?
We were trying to adopt a young son. He would have been number 5.
I
and
see.
He was able to be reunited with his family. So,
okay.
Yes.
Well, anyway, so when you hear Lori's background, you say, when does this lady have time, to deal with his family and so forth? So congratulations, super mom. She's got the blonde hair like Kara, right? The Supergirl. Oh, well. All right. Well, anyway, today Lori and I are going to be talking about real estate investment alternatives. So that's a fancy way of saying what are different ways that you can invest in real estate. And so let's just say this is, I think, an area of interest to people right now. I mean, we don't want to kid ourselves, folks. Okay, just a couple of years ago, or I guess 4 years ago now, I mean, we had a big bath. So people who thought that they were being very smart in investing in real estate were suddenly very humble. And I'll bet Lori felt a little humble then too.
Yes, we all ate some humble pie.
Okay.
But it used to be that everybody who thought they were a real estate investor was anybody who could fog a mirror.
Uh-huh.
They could sign the paper, they're a real estate investor, but there's more mechanics and foundations to being an investor than signing the paper.
Right.
And people found out the hard way.
Right. So it's more than just being a real estate owner, unfortunately. I mean, yeah, technically you are a real estate investor, but let's just say we want to be a savvy real estate investor. We want to be a real estate investor that makes money and not loses our rear end.
What do they call that, a hobby, if you're not making money?
I guess. Obviously, we're not going to cover the waterfront here in the few minutes of our interview. Okay, there are people that do whole seminars on this, and so on, have whole businesses that revolve around this. Some big players, like my friend Ron LeGrand and some of the other people, Carlton Sheets, I guess, and so forth. So these are the fancy guys that we see on the infomercials and so on, and they have their place. Mm-hmm. But anyway, we wanted to get into some brass tacks here. Okay, well, why should people even be thinking about investing in real estate alternatives now?
So we're in an economic time of uncertainty. A lot of people are flocking to gold and they're thinking that's a safe place. And I think people should consider that as an alternative for the stock market for investing. Cash, have some on hand, obviously. But another thing to think about is the commodity called real estate. And a lot of people don't think of real estate as a commodity, but when you think each piece, each component, there's labor, there's wood, there's the shingles, the faucets.
It's physical.
It's physical. It's a commodity. And during times of inflation, usually commodities are a safe place to put your money. Now, this safe place not only is safe to put your money, but it also gives you the opportunity to get dividends called rent coming back to you, whether it's commercial or residential. You know, you'd have to choose that. But I look at it as a safe commodity where you lock in today's prices for the future. So that's why I think real estate's safe.
Okay. So again, there's no guarantees that values aren't going to go down. And that's why you need to be smart about, on the properties that you choose and so forth. We're going to talk a little bit about that. But when nobody says that you have to invest just in real estate, okay, we say diversify.
Absolutely.
So you may want to have some stocks, some bonds, some real estate, some, whatever that or your own business possibly. And so, you have to determine what makes sense for you and what do you understand. And
those are two key points. What do you know and what do you understand? And what are you comfortable with? I hate the idea that somebody goes out and buys real estate and loses sleep at night. If you're not comfortable buying it because you don't know it, don't buy it. So you do need to know what you're doing before you get in.
Yeah. And there's lots of places that you can get education.
Absolutely.
So there's an association that Lori and I have both been involved with, the San Jose Real Estate Investors Association here in San Jose. There are real estate investor associations and communities really all over the country. I think that do a little searching on the internet, you can find it. And what do you have in your community where you can go and exchange information, meet people that are really doing this stuff, so that then you can decide when you're ready to put your big toe in the water and actually try this. And but you do want to get some education information before you go ahead. All right. And I guess that's one thing that we didn't talk about is, this is it's been a soft time as far as prices. So right now, again, we're doing our interview June 26th, 2012. The real estate market is still in recovery mode. It's getting a little stronger here in Silicon Valley. It's because there's been so few homes that have gone on the market, so that anything that goes on, people are in fact bidding for them just because not that much has been offered. Anyway, but in a lot of other communities around the country, it's been far worse as far as how much that real estate has been impacted. But we can't kid ourselves. I've heard of whole communities here, even in Silicon Valley, that basically they're empty homes.
Yes.
And they're still sitting there, and the pipes have been ripped out, and the wires and all the other stuff. So they're basically gonna have to probably go and tear them down and start all over again.
And that's true of every community. There's little ghost towns, developments that were made and never sold that are sitting there. They've been copper mined, and they're really dangerous because vagrants are moving in and living there, starting fires to keep warm, things like that. And so the cities are having to demo those, which is sad because all of that was put in and somebody lost.
Yeah,
so.
Yeah. All right, well, let's talk about some of the different alternatives and what are some of the advantages and disadvantages for each one of them. And so let's go ahead and start a little bit talking about rental properties. And I have in parentheses here headaches. So anyway, so we can't kid ourselves. These things take management and so on. So why don't you talk a little bit, first of all, about residential rental properties?
A lot of times people will end up an owner of a rental because they move up from their house to the next house. And they sort of fall into becoming a landlord, and they aren't prepared for the idea that even though They get rent, there's going to be expenses, there's going to be management of it. And they're thinking they're going to manage it themselves. Well, if you're a dual income family where both of you are working, you have family, you're running kids everywhere, you don't have time to properly manage this. And so get a good property manager. But what I often see people do is they'll find a property manager and just park their property there and ignore it. Well, you have to manage your property manager too. And that's a key piece. Look at that monthly statement. Are they spending your money wisely? And if they're not, find out why. And if you don't get a good answer, fire them. There's many good property managers out there. Don't ignore it. You need to manage it.
Yeah. Okay. So that's a little bit about what is an advantage, do you think, of residential as opposed to commercial?
The advantage of residential versus commercial is that people have familiarity with residential because we usually live in a house. We prefer that over a tent.
Yes.
So we're familiar with it. Commercial, a lot of times we have no experience unless we were raised in it, and so it's all unknown, and unknown becomes scary. Well, it doesn't have to be scary. Just get educated. Find some good people that understand commercial. And if you get into commercial rental properties, a lot of times there's less headaches because if the toilet gets plugged, your commercial leasee will have to pay for that. They'll take care of it. So it is a lot less headaches to do commercial, but people don't like to go there because they're afraid that they don't know how to go there.
Okay. So there's the old tradition of the landlord being armed with his plunger.
Yes. So they say tenants, toilets, taxes, and termites.
Right. So residential, you're more involved in sort of this nuts and bolts stuff. You can't expect those telephone calls in the middle of the night. But again, that's what you pay your property manager for.
That's right.
And sometimes you can even make arrangements with the person who's living in the home that, maybe you can give them a break on the rent if they'll just take care of those little headaches themselves.
I've got properties all over the country, and we don't necessarily have on-the-ground property managers. We do exactly what you said. We work with our tenants. We do lease options or land contracts, or we reduce the rent for them to take care of those problems so we don't get the calls in the middle of the night.
Right. Okay. And so, again, so to make clear to our audience when we're talking about residential versus commercial, so residential means a home that people are living in. Commercial means that you're renting to a business, and that can be a huge range from an individual building for, let's say, an gasoline place, or on up to a huge complex for Hewlett Packard or Apple Computer or something like that.
Or standalone like Walgreens or Safeway. You could have a strip
malls,
malls, or even storage units are great commercial properties.
Right, and they put out just a nice little monthly check.
Yes, absolutely.
Low maintenance, whatever. So so those have been very popular for some people. All right, so let's talk a little bit about different ways of investing in property. So there are some people that do sort of quick turning. They got the television series. Flip that house. So there's the sort of buying and selling properties quickly. So why don't you talk a little bit about that way of investing?
So there's long-term and short-term real estate investing. And the long-term is buy it, hold it, rent it out, let it just kind of sit there, accumulate small little monthly amounts. But sometimes people just need a quick infusion of cash, and they find a good deal. They really don't want it as a rental, and so they go find somebody they know that wants that property, and they flip it to them for $10,000 or $15,000 more than what they're going to pay for it. It's called wholesaling. A lot of times you don't even close on it with the seller. You just take that contract you have and assign it or sell that contract to the next buyer. And that's a good way to get started. It's very low risk. Usually there's ways to get out if you can't find another person to close on it. It doesn't take any of your own cash. It just takes your time. And a lot of times just getting started investors have time but they don't have cash.
Uh-huh.
And so that's a good way to get in. The next step up is where you actually take ownership of the property. You go in and you rehab the property for the purpose of either making it a rental or putting it on the market for a homeowner, and then you sell it either to an investor or to a homeowner. And that's another form of flipping, but it's where you actually need your own cash or you need to borrow some cash from somebody to get that closed.
So we call that fix and flip.
Fix and flip, exactly. That's the fix and flip.
Okay. And then from there we go to more long-term type of ways of
holding it,
of holding it. And then some people, they step up, buy a property, fix it up, rent it, hopefully increase the rents, and then they're in a position to buy the next property and do the same thing over and over again. And then if things work out, then you end up, with your empire here. Maybe they'll call you the Donald or something.
Yeah.
Okay.
Cash flow queen, that's
course,
my name.
Of course, I guess Donald Trump's father said, "What are you doing this commercial stuff for? You should just be buying houses." And Donald's ambition was just different from that.
Exactly.
So he decided to go in a different direction.
Exactly.
Okay. Well, let's talk a little bit about real estate partnerships. Different ways of investing, and so one of the things of each of these that we said is that there is a management aspect, that requires attention. These other ways, a way maybe that you can invest that requires a little less attention. Maybe you can talk about that first.
Sure. So there's different types of partnerships. Maybe you have the cash, but you don't have the time. So you can find somebody who has the time and knowledge and invest your cash. Just straight up partnership. You share responsibility, you share the profit. There's other things called TICs, tenants in common, that allow you to invest, and they use your money and they pool it with some other people and they go into larger ventures, like larger buildings, and then you get a share of the profit every year, and there's an end game of when they're going to sell it to somebody else and pay you off. And that's really a low risk in the sense that you don't have much for management, but it is high risk in that you're not managing it.
Yeah.
Same thing there,
So it's sort of a trade-off.
It's a trade-off.
Less control.
Less control.
Because you're giving up the control.
Exactly.
But you may have a professional management. You've given up some headaches, and that means though that you're giving up some of the potential income because
that's right.
Because you have to pay those people to do those things.
So a TIC is a lot like the stock market, where you're putting your money in and you're encouraging and trusting that those managers are going to run that business the right way, but you really don't have input on it. But that's what some people are comfortable with, and so that's one way to invest in real estate that isn't quite the stock market, so it is diversification.
Yeah. So there's a fellow that I know named Craig Martin, and so he has another company that he's been working with for many years. So one of the things is the many years. So these people have a track record, and they've done this again and again. They go in, they buy an undervalued property, basically a rundown property that's in a good location. The basics are there. It's just that it hasn't been properly managed. It needs to be brought up. They go in, they clean the place up. Well, first of all, they bring in investors to finance it, okay? Then they go in, they clean the place up. They turn these things around regularly, like every 5 years, and basically double the values of the properties.
Absolutely. And business consultants do it in business. That's turnaround consultant.
Yeah.
Well, they're basically doing the same thing in real estate. They're going in and turning it around. They can see the value that's missing, and so they add it. And that's a perfect way to get involved without having to manage it yourself. But like you said, many years, good track record, good references that aren't relatives, due diligence. You have to do your due diligence.
Yeah. So, but for them it's very formulaic, and that's good.
Yes.
So they know the formula.
Yes.
All right. Well, now we've been talking about ways for when you have an ownership type of thing. What about private lending as an alternative?
So cash flow without ownership. Some people love that. Now, private lending is simply a fancy way for saying, I'm going to loan you my money. And you're going to go do it, and you're going to pay me a return whether you make money or not. So basically, I get to be the bank, or you would get to be the bank without the hassle of management. And that's a perfect place for some people. It's ideal for IRAs. I have people that have IRAs that come to me all the time and say, can you find a place to put my money? Well, I want to lend on your properties. And so we put them in a private lending position, and they love it because they're not having to manage the property, but they get cash flow every month.
Right. And you can actually structure these things so that you participate in the profit.
Exactly.
So we heard of the equity kickers or whatever that were done way back even in the 70s. And anyway, and it's still being done. And basically, as far as like a retirement account is concerned, that's considered to be interest.
Exactly.
And so it's not such a great deal individually, but for in a retirement account, it's really a great way to go. And you avoid a lot of the side issues of unrelated business income and so forth that you can with some property type investments. And particularly, I get concerned when I see if people are trying to do a fix and flip or wholesaling inside of a retirement account, because then they're generating ordinary income.
Exactly.
And the retirement account can have to pay income taxes, file an income tax return, and they may not even know it.
Yeah, that gets difficult. So let's just talk a little bit on the other side, the note brokering.
Yeah.
So let's say I have an individual that made a loan,
Yes.
and now they decide they want that money back.
Yes.
They can take that loan and they can sell it to another individual, usually at a discount, but they'll get most of their money back, and everybody's happy in it. It's called note brokering, and so that's another way to participate. Maybe you don't want to be the first person making the loan. Maybe you want to buy somebody else's loan at a discount to get the yield that you want.
Right. So then you can you get the person the cash that suddenly maybe they didn't think they were going to need it for a while, but suddenly they find they need this cash. You can buy their note at a discount, and instead of getting maybe 7% that they originally had on this note, maybe you'll be netting 15%.
Exactly. You can get 18%. Just by buying it at a discount, you can get a higher yield on that.
Right.
Absolutely.
Okay. So another area that I guess I've sort of isolated, and we've isolated before, that we can talk about for a few minutes, is buying bank foreclosed properties. So again, we've been in this recovery mode now for about 4 years, I guess. Not quite. It's June 26th today. Can you tell us maybe some of your insights, because you've helped people a lot related to this bank foreclosure investing area?
Sure. So we're in still a downturn. The housing market has not recovered fully. People are predicting that we're at the bottom and we're going to start going up, but we won't know we hit the bottom until we're looking back and going, oh yeah, that was the bottom. But one of the things that's happening is the banks have got inventory they aren't releasing. So when there's a shortage of supply, prices start to go up, and that's what we're seeing. And I think it's related to the elections coming up. It's an uncertain time for banks to know what's going to happen with legislation after we either get a new president or the current one. And so they're holding their stock. They have all these initiatives of putting homes into rentals and things like that. So right now, everything is becoming tight inventory throughout the entire nation, causing prices to go up. And as the prices go up, the banks can start letting out a little more inventory and take less loss. And what that means for us is that we're having to pay more for these houses than we were a year ago.
Okay.
If you want to buy foreclosures, there's no problem buying them. You can either buy them through a bulk REO source, or you can go and buy them off the MLS. I highly suggest going ahead and buying them off the MLS right now, because you get covered with the taxes, all of the sewer garbage, things like that get discovered, and you get title insurance, which is, in this day and age, key piece, because we just don't know how the foreclosure happened and if there were issues. So I'm really encouraging people, unless you're seasoned, do not be buying bulk lists. Go ahead and buy off the MLS and buy these distressed properties with a purpose.
Okay. So a lot of times what people have discovered after they buy these properties is that there are a lot of headaches that come along with them, I guess is
Yes.
what it comes down to.
Yes, absolutely. Not only has the property sat vacant for almost 2 years, which is a lot of mechanical issues that you're going to run into, there are liens like compliance liens, lawns that were mowed by the city that you're due, garbage that didn't get disposed properly, all kinds of issues. And if you're not savvy, you're going to run into these problems.
Okay. We really only have a few minutes left.
Okay.
Like about 3 minutes. I know it's not much time, I'm sorry. But let's talk about due diligence for a few minutes.
Okay.
So what sort of things should people be thinking about it from that sort of standpoint? And what does due diligence mean?
So due diligence is discover everything you can about a property before you buy it. And actually it starts bigger than the property. Look at the city, look at the state. Kind of understand it from that aspect to the neighborhood down to the property. You need to know what works in the house, what doesn't work in the house. You need to know, are there any liens against that house that you're going to have to pay? Tax liens, property tax liens, garbage liens, things like that. So you really need to understand everything that affects this property that's going to impact your bottom line.
Now, we've talked about this a little bit before, that it may not even show up, the liens may not show up in a title search.
That's correct.
So you may have to, and it sort of depends on the state that you're in. So Lori's a good person to consult with related to this. But anyway, you may need to actually call the utilities and so forth. Get on the phone and ask.
That's one of my pet peeves, is we are so technology based, we think we can do everything on the internet. But when you're dealing with states other than California, you need to pick up the phone and call and ask them, okay, I see that there's a garbage bill here. Can you tell me, is there anything else? Is there another department I should talk to? Oh yeah, you should talk to compliance. And then they transfer you and you find these things out. And you should be doing this even on the properties you're buying through the MLS, because your title companies don't check those things. They only check the title.
Yeah.
So these become your responsibility.
So I'm trying to wake our viewers up and say, this isn't necessarily a snap. And so you really do want to get educated as you're getting involved in this. Lori, I think we're getting pretty close to being out of time, so I'm mostly going to thank you so much for coming and being my guest and sharing with us again about this and giving people some real basic information to look into getting involved in real estate investing. So folks, be careful out there, but nonetheless there are some great opportunities around the country in real estate investing. We'll see you next time on Financial Insider Weekly.